Have you ever seen the price suddenly shoot up, then drop back down to exactly where it started? It's almost like something just pulled it back. That's not just anyhow wine. There's actually a reason why this happens every single time. This thing is called a fair value gap. Welcome back. Today, we are going to talk about fair value gaps, which is one of the most powerful and consistent ideas in modern technical analysis. I'll be showing you real examples on PUPrime's web trader, so you can see exactly how these look like on a live chart. Once you know what they are and why they form, you start spotting them everywhere. So let's break it down. This is just for educational purposes only. So here we are on PUPrime's web trader, and I'm basically going to show you the fair value gaps on their chart. So let's jump right in. If you're really serious about improving your trading results in 2026, it's time to stop relying on guesswork, alright? Let me introduce you to signalpeak.io, a trading signal platform that's built around precision and structure. With SignalPeak, you get real-time trading signals, clearly defined entry points, take profit and stop loss levels, plus structured market analysis that actually explains the setup. There are also dedicated channels tailored to different trading styles, so you can just follow whichever suits you best. Most importantly, everything is built around discipline and proper risk management because consistency always comes first. If you're still not sure, they offer a free trial so you can test the quality yourself before you commit. Don't chase the market. Trade with structure. Trade with confidence. Try signalpeak.io today. Now, let's get back to the video. Now, a fair value gap forms when price moves so quickly in one direction that it leaves a gap, an imbalance on the chart. Now, 3 candles are involved, right? The first candle moves in a direction. The third candle moves so aggressively that its body doesn't overlap with the first candle's body at all. That space in between, right, the gap between candle 1 and candle 3, is the fair value gap. Now, price moves fast when there's a big imbalance between buyers and sellers. When a news event hits or a major session opens with strong momentum, price can move so quickly that not everyone gets filled at a fair price. The market was moving too fast. That inefficiency, that area where price skipped past too quickly, is what the FVG represents. The market has a tendency to return to areas of imbalance and fill them. Think of it as the market correcting itself, going back to the area it rushed through and allowing the orders that didn't get filled to be completed. This is why you'll see price shoot up, then pull back into that gap before continuing its slow direction. The pullback into the FVG isn't a reversal, it's the market rebalancing. A bullish fair value gap forms during a strong upward move. The gap is below current price and acts as a support zone if price pulls back into it. A bearish fair value gap forms during a strong downward move. The gap is above current price and acts as a resistance zone if price bounces back up into it. Now, you're not using fair value gaps to enter trades blindly. You're using them as a reference point, a zone where if price returns and the overall direction of the market agrees, there's a logical reason to look for an entry. The fair value gap tells you where the market left an imbalance. Your job is to check whether the higher time frame structure agrees with trading from that zone. Fair value gaps form when price moves too fast and leaves an imbalance between candle 1 and candle 3. Price tends to return to fair value gaps to rebalance before continuing in the original direction. A bullish fair value gap is a potential support zone. A bearish fair value gap is a potential resistance zone. So always check the higher time frame structure before trading from a fair value gap. Context is everything, which is why we spoke about market structure in the previous video. You can see here that we are making lower lows, so the bearish fair value gaps, they hold as well. Coming down again, see, bearish fair value gap holds again. So once these things line up, you're in a good position to take some trades. Spotting fair value gaps is one thing. Having the right platform to mark them and to monitor them is another. Charting tools on PUPrime's web trader, they let you mark up fair value gap zones quickly and cleanly. There's no downloads, no setup. It's just straight from your browser. And because the platform shows the full candle history, you can scroll back and study how prices reacted to fair value gaps historically on any pair you're watching. PUPrime are running a World Cup trading competition right now, and this is a big one. I'll leave all the details in the description below. But if you're looking for a reason to get your account set up and active, this is it. Go check it out. And on top of the World Cup promo, PUPrime have a few things worth knowing about if you're just getting started, because learning market structure is step 1, but you need the right platform to practice it on. The insight section is also worth mentioning here because fair value gaps often form around major news events. Understanding what caused a big move helps you decide whether the fair value gap it left behind is worth trading from. That context is built into the platform. Also, quick reminder, PUPrime's World Cup trading competition is live. Details are in the description below. The PUPrime link is also in the description, so go explore the charts and find these gaps yourself. Fair value gaps are the market telling you where it moved too fast and left something unfinished. Price comes back. It almost always does. Learn to spot them and you start reading charts in a completely different way. Head over to PUPrime, pull up any pair, and start marking these gaps yourself. The link is in the description. Next video, URL liquidity pools, where price is actually targeting and why understanding that changes everything about how you read a chart. See you there.